Holy smokers, folks, this ain't no dang jokers. It's been a while since I think I used that phrase, okay? In this video, I got to show you what just happened in the market, but much more importantly than that, we're going to talk about why this is happening, essentially, okay? Why is the market going absolutely insane all of a sudden? And then we're going to talk about what this means for the future of the market, which I think is very, very important, because we have what happened today is actually, in my personal opinion, the second most important thing to happen this month. There's something going on next week, essentially, that in my personal opinion is even more impactful to the future of the stock market. And if you want to know if the stock market is going to continue to collapse like it's been for the past month or so, and actually the past several months, or if we're going to keep this momentum up, I think next week's actually going to be much more important. So NASDAQ had a great day today, up over 3%. All the indexes had an incredible day. By the way, shout out to FTX US, the crypto partner of the channel. Check out the pinned comment if you want to sign up for FTX US. And actually, right now, you can get up to $100 in free crypto through using my link down there. Make sure you use referral code HOLYSMOKERS. And yeah, once you place trades through the app, you can get up to $100 free in crypto. So it's pretty awesome. So I thought this was interesting here. NASDAQ, from the bottom today, it was actually up 4.7%, almost a 5% move in the NASDAQ from the bottom here today, which is pretty darn telling. I mean, when you get that sort of move in the market, that's nothing short of extraordinary. The Russell from the bottom here today, which is small cap stocks, up about 3.7%. So, I mean, these are massive moves. You got to get a lot of buying volume and a lot of buying pressure to get into the market to get these sorts of upward moves in the market overall, okay? The Dow was up over 1,000 points from the low. So at the lows today, the Dow was right around 33,000 even, okay? And by the close of the day, it was well over 34,000. So up over 1,000 points from the low today. Just an absolutely insane move for the Dow. Now, in terms of my personal stocks, this is incredible, okay? Now, keep in mind, when it comes to my stocks, here's the thing you gotta always remember. If the market goes risk on, a lot of times, many of my stocks are gonna do much better than the market. If the market's way risk off, my market's gonna do worse, or a lot of my stocks will do worse than the market, essentially, okay? And a day like today was incredible, okay? Absolutely incredible. So Avant Brands, which is my smallest market cap stock, was up 17.5% today. This is a company that just in their last quarter grew over 100% year over year. It's an incredible growth company with an incredible balance sheet and an incredible management team at that company. 17.5% that stock was up today. Oatly stock was up 12.8% here today. Smile Direct Club is a smaller investment for me, but it is a stock I do own. It was up about 8%. Same thing with Beyond. It's a smaller investment for me, but it is a stock I do own. That stock was up 7% today. Voyager Digital up 6% here today. The FB, Meta, up over 5% to me today, to me, for all shareholders out there, okay? The TDCF had a great day yesterday, followed up by another great day today. That one's up over 5% here today. Tesla Maesla had a great day, up almost 5% that one. Honest had a great day, up well over 4% on Honest today. So yeah, I mean, in terms of my accounts and just how today was in the market for me, I mean, that's back-to-back just great days in the market for me. But obviously, specifically today was just an incredible day, and that's just the way it is. Like, especially when it comes to a lot of my more speculative stocks, right? Which, you know, when it comes to my personal stocks, you kind of got to group them by different groups, right? Because I own stocks like PayPal and Meta and Amazon and companies like that, Tesla, that people don't put as in this speculative as a category, because those are big, huge, established, worldwide brand known companies, right? Then I have companies like the Chef, and you throw in Avant Brands in there, Honest, Oatly, stocks like that, which people see as more of a speculative stocks because they're obviously newer to the markets. They have a lot to prove over the coming years and things like that, right? And so those certain stocks, right, are going to do absolutely incredible if you can get a risk on market. Those stocks literally will go up 50, 100%, 150% in a snap of fingers if you get a sustained risk on market for several months. You know, those stocks, as they say, to the moon, okay? That's just the way it goes. But at the same time, look at how much those stocks have been devastated because we've been in a risk-off market. And so it works both ways. The more speculative a stock is seen by Wall Street, doesn't mean it is, it's just the way Wall Street looks at it, right? The more that if you're in a rough market, people won't want to own those stocks. But if you're in a bullish market where people are wanting to take risk, there's no doubt those stocks are going to absolutely just obliterate the indexes and obliterate index funds and things like that, right? Look at ARK today. If you want to talk about risk on, talk about ARK. You got to bring up ARK, right? ARK was up 10% from the lows today. 10%. I mean, that'd be ridiculous if it was in a week span or a month span. The fact that this was in an intraday up 10% from the lows today is mind-blowing, okay? Mind-blowing. But remember, the ARK ETF, this is very, very important for everybody watching this to understand. If Wall Street wants to take risk, the ARK ETF is going to do incredibly well. And I mean absolutely incredibly well, okay? That's just the way it works. If the NASDAQ's up 3%, ARK's going to be up, 4, 5, 6%. That's the way it works. If the NASDAQ's down 3%, ARK's going to likely be down 4, 5, 6%. ARK ETF, think of it this way, okay? The ARK ETF is almost like a call option or put option on the stock market, essentially, okay? Well, SARK would more be the, which is the inverse of ARK, but that would be more the put option, right? But basically, whatever the NASDAQ does, ARK's going to usually do, increase to the upside or increase to the downside, essentially. It'll do better than the market or worse than the market. That's just the way that ETF works, okay? And people see it as kind of a risk on or risk off play. And you have a lot of people that are in ARK nowadays, guys. It's very important to understand. You have a lot of people that are in ARK that are using this as a trading vehicle rather than an investing vehicle. And I know Kathy Wood, when she comes to her investments and things like that, she thinks of them as investments. But when it comes to the ARK ETF, a lot of people aren't in that necessarily for investment reasons. Some are, but a lot are doing it for day trades or week trades or like swing trades. Like maybe they're swinging the market for a month or 2 months or something like that, right? And so that's why a lot of folks use the ARK ETF. And look at a day like today, up 10% from the lows. That's incredible. Absolutely incredible here. This was shocking to me. Housing stocks went beast mode today, right? You look at KB is up almost 6%, Century Communities up 5%, Lennar up 5%, Toll Brothers up 5%, Pulte Home 5%, Rocket was up about 4%. Now, the thing I'll say about the market here today is obviously it was such a green day. It pushed up almost everything. Like, I hope you guys made a lot of money in the market today. That's all I'll say about that, okay? Unless you're short sellers. Yeah, that would have been ugly, right? But when it comes to housing stocks, it's interesting. These ones actually went up today because, I still think housing is dangerous this summer. I really, really do. You look at mortgage rates, we're approaching a 5.5% number on mortgage rates now. And when it comes to mortgage rates, I don't know if that's slowing anytime soon. We're talking about 5.5%. At some point this summer, we could be 6% plus for mortgage rates, guys. 6% plus. And so when you think about the housing market and you think about how insane prices have gotten, right? And you think about the affordability of homes in almost every single market is not good right now. And then you tack on these insanely high interest rates that are just getting higher and higher. And I know people will say, well, look at what interest rates were back in the 80s or something like that, right? Well, this ain't the 1980s, okay? This is 2022. And the fact is we haven't seen 6% mortgage rates, which is likely where we're going this summer, if not 6% plus. We haven't seen those sort of mortgage rates in a long time. Look back to the last time period we saw an average mortgage rate of 6% plus. You're going to have to go way back in the history books, okay? Never mind, they're even talking about 7% plus by the end of summer, maybe even fall time. Go back and find the last time we were at 7% for an average 30-year. Give me a break, man. We're a long way from there. And guess what? Last time, homes were having to deal with mortgage rates of 6, 7%. Houses were a lot cheaper. A whole lot cheaper. And wages have not gone up at the same rate since that time period as home prices have. So these are important things to at least consider and remember for folks out there. And that's why I think it's dangerous for housing and obviously kind of dangerous for the market, right? Look at this. Oh my gosh. Big tech. 9% for AMD, obviously 5% for FB. We talked about that one earlier. Tesla, almost 5%. Shop, 4% plus. Apple, the biggest market cap in the world, 4% plus today. 4%. I mean, these moves are incredible, right? Think about how much Wall Street money had to have flown in the market in the last few hours of trading after Powell came out and talked to move those sorts of stocks like that. I mean, all those stocks you're looking at right there are pretty much like, around 100 billion or much more than $100 billion type market caps. And some of those are $1 trillion plus, right? And so to get those sorts of stocks to make those sorts of moves, the amount of money that has to be flushed into the market at a given moment has to be immense to get those stocks to go up 3, 4, 5, 6, 7%, AMD 9% plus. It has to be a huge number, and that's exactly what we saw. And so that's just a moment of time where, you know, you're looking at the market and it's just like, that's incredible, those sorts of moves in a matter of hours. Some of these stocks were negative. Some of these stocks were negative, a few hours before Powell came out. And then, by the end of the trading, they're like 4% moves. It's incredible, right? Now, in terms of what Jerome Powell said, obviously they're, raising rates, right? 50 basis points. So first off, that's expected. Everybody expected that today. So there was no shock, right? Also, the Fed did say that eventually they're going to, they're going to reduce their bond holdings by $95 billion a month. Okay, that was expected as well. The rate moves the largest since 2000. That was expected. There's nothing there that was unexpected. However, one certain thing happened that was much better than expected, and that is right here. Fed Chairman Jerome Powell underlined the commitment to bringing inflation down, but indicated that raising rates by 75 basis points at a time is, quote, is not something the committee is actively considering. Okay? That right there is huge, guys, because the market was very paranoid and was very scared about the Fed potentially, keyword is potentially, raising rates by 75 basis points or talking about maybe 75 basis points next time, okay, which was definitely something that was going to freak out the market. And so we got into this situation where people were scared. People were scared going into this meeting. Investors were scared. Traders were scared. And that's one of many reasons you saw this massive sell-off of stocks in the month of April, because everybody knows this situation was coming out here at the beginning of May, and a lot of folks said, yeah, I don't want to risk if he comes out and says they're talking about 75 basis points. And so the fact that not only did they not raise 75 basis points, they did 50 basis points as was expected. Nothing unexpected came out of there. The fact that they're not even actively considering 75 basis points gave the market this huge sigh of relief, because the market is scared of 75 basis points. The market could deal with 50 basis points, but at 75 basis points, that was going to be one that scared the market. So that's why the market rallied absolutely massive today. And think about it from this perspective, right? We went into this week with the most bearish sentiment we've seen in like 100 years. Okay, maybe not 100 years, but it's been a long dang time. And I could only find a few, the AAIA sentiment, this has been done since the 1980s. And I could only find a few time periods ever where the market was more bearish than right now, the period we're going through right now. And so almost no one was bullish going into this meeting, right? 16% of investors were actually bullish on the market over the next 6 months. So I don't want to say you reached a level of max fear and pessimism in the market and bearishness, but gosh darn, when you start talking about only 16% of investors are bullish on the market for the next 6 months, you're pretty darn close, because guess what? Even in the 2007 to 2009 crash, there was more than 16% of investors were bullish on the market, okay? Even in that time period. Even in the March lows of 2020, there was more than 16% of investors that were bullish on the stock market over the next 6 months. I don't know if I've ever seen that low of a number. When you start talking about 16% of investors are bullish for the next 6 months, those are numbers that are so incredibly low. Like you can't really even find time periods, other than this year we're going through right now, that few people were bullish on the market, okay? And so that means a lot of people were just caught off sides, because that means a lot of people have flooded to cash, or dare I say, have shorted stocks. And so if you're shorting stocks, right, and you see these babies pump, you got to cover, right? You start covering, boom, boom, boom. Let's say you were short Apple or whatever. Let's just use Apple as an example, right? You're short Apple, boom, Apple starts spiking. You got to cover that short. You got to get out. Like, oh boy, market's going back, risk on. I got to cover that short, right? Which when you cover a short, you got to buy those shares back essentially, okay? Think about it from the context of not just being short stocks, but your cash, right? Imagine your cash and you see these stocks all of a sudden start to move, and you're like, shoot, am I about to miss this big rally? I better get back in. Market's going risk on. And so you kind of have this like flood of momentum starting on a day like today, right? Where people start kind of freaking out on the other side and then realizing, oh man, I might be a little bit off sides in this, right? And so that's a tough moment kind of for shorts, because like I said, you know, when you start talking about 15-16%, you can't find time periods in the past, since the past decades, where that few investors were bullish on the market. You literally can't. Like, it's absolutely incredible. Absolutely incredible. Like, how far back you even have to try to go and find. And you can pull up the historical sentiment. Go to their website. Pull it up. It's insane how bearish the market is. So many people have been caught off sides by what happened today. It's not even funny, okay? Now, the much bigger thing that is about to happen, that I think everybody should be paying attention to, is what's about to happen on May 11th. That's, to me, a much bigger day, because that's when we're going to get the new inflation numbers out, essentially, okay? And it's been runaway inflation for the past year plus. I think everybody watching this knows that, right? And it's like a horror movie that just gets worse and worse and worse, right? And so March coming in at 8.5% is just awful. Now, the big thing when it comes to this is I think there's a high probability that we either peaked in March or will peak in April, in my personal opinion, okay? And I've gone into this in videos in the past, so go check out some of the videos I released over the past week, because I went into depth on that. And so the markets, I don't even think the market's considering that as a possibility. I think the market expects this number to go to 9%, 10%, 11%, 12%. I think the market thinks this is just going to continue runaway inflation throughout the whole summer, essentially, okay? And I don't think that's going to be what's going to happen. I think there's a high probability that we're going to see inflation rate of growth start to shrink within the next 1 to 2 months. And maybe even in this May 11th number when we see April. We'll see. But if it's not April, I think it's May. That's my personal belief. And so if we see that happen, the market's going to be totally caught off sides again. Because then if you start having the inflation number shrink and shrink and shrink and shrink, then all of a sudden the Fed, guess what? They don't have to raise as aggressively. And also, we'll go from a situation where the market was paranoid and scared about 75 basis point raises to all of a sudden people starting to talk about, hey, I don't even know if they're going to raise 50 basis points. Maybe they're only going to do 25 basis points, to all of a sudden people will start talking about, I don't know if they're going to raise at all. Because if inflation rate starts coming down in a massive way, that's going to be the next sigh of relief for the market. And I think that's what everybody should be paying attention to, in my personal opinion. That's more important than actually what Powell said today. So that's my personal opinion, because that's going to be what dictates the numbers over the next 3 months. As far as inflation numbers, that's what's going to be what dictates, you know, if Powell and the Fed, if they raise another 50 basis points and then they plan to do another 50 basis points after that. This number right here, this is what dictates the whole thing right now. I think it's very important for everybody to pay attention. Hope you enjoyed today's video. As always, make sure you check out the first link in the description down there for FTX US. Easiest way to buy crypto, 24/7 customer support, 85% lower fees than competitors. Get your free crypto from them when you trade with FTX and use my referral code. Much love as always, and have a great day.